Within fintech, what are the subcategories that are underrated or overrated? There's a lot going on from payments to lending to Web3, stable coins, wealth tech. What's intriguing you?
It's not a surprise with 20 some odd investment professionals and a surface area that is global in nature at this point. There's a lot that we're looking at. Almost every investment, in fact, every investment professional has multiple theses that they're paying attention to and an area of expertise that they're focused on.
Mhm.
So we probably have 40 or 50 different things that we're paying attention to and almost keeping our eyes open and being receptive for a business that we hope ends up coming into existence, right? That
Mhm.
will solve some of the problems that we're identifying. To be a little bit simplistic, there are a couple themes that I think are incredibly interesting that are crossing multiple partners within the firm. Some of them are going to sound very generic because other VCs talk about them, but I think there's a nuance in finding the right ones. Enterprise SaaS that monetizes through fintech is a really interesting concept because new operating systems are being built for almost every vertical. And once you create the new operating system, once there's a new way of doing work in an industry, the big pillars of banking all of a sudden come to the front of the value proposition and how money is made. So for almost any ecosystem, money needs to be moved. And a lot of times it has to be moved in a very specific way. A lot of times there's an advancement of money or borrowing of money that's necessary in order to create capital efficiency for players in the ecosystem. Sometimes there's custodial services, right? There are things that happen. Sometimes there's insurance that needs to be layered on top of things. So we have a business that intersects transportation tech and fintech, right? That it's a company called Nuvo Cargo that all they do is help trucks get from Mexico to the US, right? And they built an operating system for the trucking companies to schedule the trucks, to get insurance on the various trips, to move money back and forth, convert the currency from pesos to dollars. There's a lot of fintech that's embedded in that, but it starts with how do you get trucks from Mexico to the US? Here's the
Right.
operating system, right? I sit on the board of a company that's at the intersection of music and fintech, right? Every single song has a cap table, and the cap tables have historically been in contract form sitting in on someone's desk. And every 6 months, they'll look at all the payments that come in and say who gets paid what. Guess what? 85% of all earned money in music now comes through a digital source. So if you can actually host a cap table for each song and connect to the digital sources, you actually could have real time payments going to creators,
Incredible.
right? And so many of these new artists, like they're trying to make a living for themselves. And if you have to wait 6 months for payment, like it's a really big deal for them, and advancing that money real time is important. So again, vertical SaaS with fintech put on top of it, I think is a very interesting theme.
I like that. Those are great categories. On the music and fintech, you touched on a concept that I'm very passionate about, which is how do you enable creator economy and crowdfunding of artists that are building fan bases via social media and enable investors, namely their fans, to both underwrite because they know them best, two, promote because they're fans, and three, participate in the American dream and unlock that. And it sounds like you've got a very exciting business there. I personally would like to see crowdfunding laws upgraded so that you can enable NFTs to interact between the artist and the end user and help to manage the payment and the syndication flows.
Yeah. And the company's name is STEM, and they are a data analytics company as well that can analyze the future revenue streams for songs because they have decay curves. When an artist actually uh, makes music available on all of the major platforms, you can actually watch with data if it's being added to playlists. You can actually use the data to figure out how often it's being played. Is it being played more often? Is it being picked up in movies or in TV shows, right? In kind of sync work. So there are all these things that can happen that go into what the decay curves look like on how much revenue is going to come in over time. So they can actually advance money against future revenue streams, and they can actually arm fans with the data if eventually there's monetization of these streams out in a crowdfunding type of way. They could be the data analytics platform that
Mhm.
powers them. But it starts with information. It starts with APIs and connectivity, like all of the things that have been playing out in the past 4 or 5 years in the fintech world. And then you
Right.
layer payment stream or a royalty advance stream on top of it. And that's where fintech.
Right. It's the evolution, right? This continuation of embedded finance where, say, the 2010 to 2015 was own the customer, develop a brand, develop a neobank. And the ideas that you've identified here are about the behind the scenes enablement. In your first example, you've got a trucker who needs an open table like reservation tool to manage where they've got to be, but you've identified a financing or payments opportunity there. And similarly with the music and the fintech
Yeah.
opportunity.
And for the truckers, they need insurance. They need bank accounts. There are a lot of things they need, and becoming the operating system is a good step one.
Any thoughts on AI, digital assets, crypto? And then we'll talk about how you manage buzzwords, new buzzwords that come up.
Look, any new technological development creates an S curve where the companies that end up climbing that S curve and sitting at the top of it 3, 5, 10 years down the road end up capturing a lot of value. And the question is what that S curve looks like, who is actually climbing it, what the competitive set looks like, and how much noise there is relative to signal. Right. So I think it's a well known statistic, but if you look at search wars in the early days of the internet, something like 97% of all of the enterprise value creation could have been captured post Google going public. Right. The amount of money that was lost in figuring out who was climbing the S curve and who was going to win that battle, massive amounts of money ended up getting wiped out in the venture world.
Say some more around that. Are you saying that you said that after the rise of Google,
Yeah.
90%? Go ahead.
So they climbed the S curve and they ended up being a winner. But the category was so large that once they were a winner, they continued to grow. And the value was captured in the public markets, not in the sausage
Gotcha.
making to
Gotcha. So
figure
betting
out.
on Google, the upside was after the Google IPO, after the winner had been identified.
So in AI, as an example, like we all know how profound the shift is.
Right.
This is something that I've been waiting for over 30 years. I actually studied AI in college.
Yeah.
My school was paid for by the Jet Propulsion Laboratory, and I wrote code that went up on the Mars Explorer mission. This is something that I've been watching for a very long time, and it finally feels like AI is at a point where it's going to make a very large difference, and it is a new platform. It's a platform shift. But the problem is investing at this point, there's a lot of noise, not a lot of signal. It's going to create confusion in the market for buyers of products. The cost curve is collapsing very quickly. If you're investing in a company today, it will cost you more to get answers to questions than a year from now if you ask those same questions. So the question is, are you generating durable enterprise ad- uh, advantages faster than the cost curve is coming down for the next people to come in and build on top of the successes that have been discovered? And that's a really difficult thing when a lot of what you're investing in today isn't software, right? So if you're investing in an AI company, you're not necessarily investing in a lot of software, you're investing in compute.
Mhm.
And that compute cost is coming down by, make up a number, 10x year over year. Like it's coming down
A
incredibly
lot. Yeah.
rapid.
Right.
If it would cost you $400 million to train a model today, it might cost you $4 million to train that model 2 years from now. So unless you can create durable advantage over this 2 year period, you might as well wait and figure out like what the world looks like when compute comes down. And there will be winners, right? There will be someone that actually does create durable enterprise value in the meantime. It might be incumbents though, right? This is a platform shift that's very different than other platform shifts. A lot of platform shifts, the platform was so different than the platforms that came before it that startups had an advantage over incumbents. But in this case, it really is about compute and it's about APIs into big LLMs, which is one aspect of AI. There are a lot of other things going on in AI. But a lot of big companies understand APIs. A lot of big companies understand compute. They understand data centers. They understand buying hardware. So even though it's a platform shift, at the same time, it's a platform that's actually very accessible to incumbents. And you're seeing it with the likes of players like Adobe. Adobe is going to do incredibly well with artificial intelligence, and it might capture opportunity that otherwise would have been available to the startup ecosystem with the advantage of a very large embedded customer base.
Mhm.
And they can afford to overpay for compute now because they have a core business that's subsidizing it and they don't want to lose their lead. So again, I actually think there's a lot of promise. And if we had a lot more time, I would talk about how bad carbon based learning machines are, i.e., human beings, and
Right.
how silicon based learning machines are, and some of the problems that they really can tackle because it can overcome how bad we are as learning machines.
No, absolutely. No, I agree. I think the AI creates an event horizon. The velocity of change is so high. And as you pointed out, there's a trade off between the cost curves coming down and what you learn per investment.